Hello, today we are solving October 20. Hello, today we are solving October 2023 paper Unit 2 Part B. Evaluate the usefulness of auditor's report to the users of financial statements of Matara Clothing PLC. So we can see that you have to state all the different roles of auditors. The usually and they have I have highlighted them like in the blue. So you should be able to enforce that they are doing all this, and therefore they are useful. But you can also say, however, some things might not happen, and those could be disadvantages of auditor's report. So the auditors, when they prepare, they are independent scrutiners who may report that the accounts have been prepared correctly in accordance with the IAS, which means they are following IAS standards, and it is a standard procedure across the world. Then they also will report true and fair view. Then for a company, auditors state whether the company accounts have been prepared in accordance with the requirements of the company law, whether the company law has been followed. Then report should state whether or not the business is going concern and has future on the financial backgrounds. This may help shareholders with decision making. Auditors are reporting on how the directors would have used the funds invested by the shareholders. The auditor's duty is to the shareholders. Then auditors may also give tax authorities confidence that the tax computation is perfectly correct, and professional supervisory bodies also exist to give the guidelines to the auditors concerning practices and standards. Example, auditing practicing boards and financial reporting councils. Then they will guarantee integrity and competence. How? Because they are usually professionally qualified chartered accountants. So this will guarantee the integrity and competence of the report prepared. And also these are meant to be accurate, so the shareholders will be able to judge how much reliance they can place on the accuracy of the financial statements, and this will hopefully help them to make better informed decisions. They prepare accurate reports. Then what are the things against this auditor reports are, because they may not be independent, going along with the wishes of the clients in order to keep their customs, so they may not be employed to carry out their duties on behalf of the client, which auditors would prefer not to lose. Then auditors could also mislead by the directors and provide an inaccurate report. Then auditors do not guarantee that material fraud has not occurred. If the auditors were required to guarantee that material fraud had not been occurred, then the cost of the audit would probably be unacceptably high. So then also the public think that there is a clean audit report means all is well within the company, but this might not be the case. So this is called as expectation gap, which cannot be filled by the auditors. So in conclusion, you can say auditors are report is important and it is valuable.